Good morning, clients. Just want to spend some time to just go through the market with you all. I've been in school, so not much time to actually go through the market. Okay, so first thing first is let's look at the few markets. Let's look at I just plot out this Shanghai Stocks Exchange, right? Recently, China just cut their interest rate. So let's look at the stock. How is it performing? Okay, the last time it cuts its interest rate was in 2008. Okay, this was the region around 2008 when they start to cut interest rate, and okay, this is 2008 when they start cutting interest rate. Okay, and then recently again they cut interest rate again. You see from this chart, this is a triangle forming, and there's a breaking down of this chart. This is what we call a symmetrical triangle. A symmetrical triangle is a continuation pattern. So previous trend was down, consolidation, and breaking down of this symmetrical triangle. Yeah, one of the reasons why they cut interest rate, normally when you learn in textbook, is when you cut interest rate, it's good for the stock market. But in real life, like example in 2008, we see that after they cut interest rate, the stock market continues to go down. Okay, one of the reasons is because why they cut interest rate is because maybe they feel that the economy is not growing fast. So that's the reason why they cut interest rate. Nevertheless, we look at the facts. The market has been dropping even after the announcement of the cutting of interest rate. Okay, this is for China. There is a price projection using this symmetrical triangle. If we were to able to draw this this part, I would say from this longest length, okay, this longest length, and I were to project it downwards from here, it will be give you a price target of around 1,950. Okay, this is my price projection for this symmetrical triangle. Okay, next let's look at the S&P. Yesterday S&P rallied quite a bit at the closing. Is there any concern that there is a change of trend, or are we still in a continuation of downtrend? I messaged to a lot of my clients that this is still a technical rebound and not a change of trend. Okay, one of the reasons why is because we can see that the trend, this is S&P on daily chart, 20 and 40 MA, 20 and 50 MA plotted. This is the CCI high. Those who attended my swing trading class will know that this is right now a swing trading setup. Okay, with the 20 and 40 sloping down, the CCI is now overbought. Okay, the CCI is now overbought. We are looking for the next leg down here. Okay, this is similar to if we go on long, 20 and 40, 20 and 50 sloping up, CCI down. Okay, then the continuation of uptrend. So we assume that this downtrend, we can see that this downtrend is rather strong. So this rally up, okay, and then we are looking for another leg down later. Okay, of course it's always about probability. There is also a slight chance that it may just shoot up all the way. However, saying that, I've shared in my class that it's not so easy to clear with such a two MA so far apart. Okay, like example, we see here, the MA is very far apart. Usually there will be another leg down. Okay, until what happens, the two MA become closer, then there's an easier chance for it to go up this way. Okay, let's look at the STI, which a lot of clients will be concerned. Okay, this is the STI. Okay, 20 and 50 MA. Okay, 40 and 50 are interchangeable, so sometimes I use just 20 and 40. Okay, but this 20 and 50, both trend is very clear, downtrend. Okay, when it's bearish trend, we can even look at the 10 MA, which will be around here. Okay, I won't plot it out, but you get the idea, right? It's around here. So CCI is high, and then right now it's broken down from this high again. Okay, my target for STI, okay, if we look at the Fibonacci retracement level, the target for STI for the first one is here. Okay, you see I've corrected more than 50% downwards. Okay, here is a 50% level. Okay, it went up, resistance, come down, support, went up, resistance, breakdown, 23% retracement, went up, retrace at 38%. This is a bearish signal because the chances of it hitting here is about 60 over percent based on Fibonacci. Okay, the next one we look at is if we will remove this one. The next one to look at Fibonacci retracement is this one. Okay, similarly, we see that it has 50%, which is over here. It is the resistance. Okay, so right now it's playing around 38% and 50% over here, which is still telling us that it may even hit lower here, 2524. I have said it in client meeting many times since October last year that we will have a mid-year rally. Okay, mid-year rally, and then end of the year we were looking at a lower price. Okay, let's look at the US dollar. US dollar is a bit interesting yesterday. Okay, this is US dollar. Okay, yesterday stock market went up, correct, for S&P. S&P went up. But what happened to US dollar? US dollar actually strengthened yesterday. Normally, when the stock market strengthened, the US dollar will weaken. But yesterday, US dollar strengthened. Okay, you can see from here, down, up, coming down, CCI low, rebound from this up. So this is still a remain uptrend. Bearish for stock market, bullish for US dollar. Okay, VIX. Okay, we have talked about the VIX before. This is the VIX 2050 up and then down. You can see that from here there's pull back down. If we have plot the CCI, you can see that the CCI is now oversold. Okay, waiting for another surge up. Okay, the next level to look at is maybe this resistance around here and then going up. This is like a fear index. I think fear over the last few days has reduced, but my view is it's still going to increase after this. Okay, so in general, stock market short on strength. Okay, no, short on strength, right? Stock market want to short on strength. Okay, let's look at some more, like the Europe market. This is Europe market. Okay, up, CCI high, sell down, up, CCI high, sell down. Downtrend is very intact. Okay, okay, I will stop over here. Do trade with money management. In general, I wouldn't overextend at any point of time. If you're using CFD, I will keep at least 50% in cash, only using the other 50% as my trading capital at any point of time. Okay, that is a very, in my view, a very safe money management rule. Some use up to 70%, but for me, I use up to 50%. Don't get margin call. I mean, if you get margin call, it's not a nice thing. So what I want to do is always to do trade with money management. Okay, thank you, clients. Thanks for your time. Okay, God bless you.